Hi, my name is Alex Carlucci with Gustan Associates at Loan Cabin. I'm here to talk about manual underwriting. We specialize in that here, and I'm just going to focus on compensating factors. They are very important. Let's go over all four of them. First one is 3 months reserves in your bank account after you close. So that's after you pay your down payment, after the closing cost, you have 3 months mortgage payments in the bank. So that's a compensating factor that will allow you to do a manual underwrite. So let me back it up a little bit, because let's talk about manual underwriting. I can't just talk about compensating factors. Manual underwriting means that you got to refer eligible. But you get what's called a refer eligible, means you can go on manual underwrite. Let's say that you pass the manual underwriting test, and now you have to go look at this chart on what percentage of debt to income ratio you're going to go to see what kind of compensating factors you need. If you're going 31 over 43, that's housing expense 31% of your gross monthly income over 43 or less, then you only need one compensating factor. Or I take that back, you only need 1 month's mortgage payment in the bank. So if you go to 37 over 47, you need one compensating factor that I'm going to go over in a second. And if you go 40 over 50 debt to income ratio, and that's the max, and then you can't exceed that 40 front end, then you need 2 of the compensating factors I'm going to go over. So if you 31 over 43, you just need 1 mortgage payment in the bank. 37 over 47, you need one compensating factor, and 40 over 50, you need 2 compensating factors. Those compensating factors are, I'm going to go back to that, 3 months mortgage payments after you close in the bank. So, and it's got to be your money, it can't be a gift. All the other costs towards this transaction can be gifted to you, except the reserves. It has to be money that you saved, or you sold a car, or it's in your 401k. So that's one compensating. Number 2 is if, let's say you're paying rent. Let's say you're paying $1,000 a month rent. You can't exceed 5% of that payment. So you can't have more than $1,050 mortgage payment with taxes, insurance, and PMI. And that would be a compensating factor if you're less than that, $1,050 or less, if you're paying $1,000 a month rent. But we're going to have to prove that $1,000 a month with 12 months canceled checks. So you have to show we paid $1,000, and you can't exceed it by 5%, which is $50 in that case. So if you're $1,050 or less, you have another compensating factor. So if you have those 2 compensating factors, for example, you could do the 40 over 50, which is the highest manual underwrite ratio you can go to. So basically, you take your gross monthly income, let's say it's $55,000 a month, you could have a $2,000 mortgage payment, because 40% of $5,000 is $2,000. That would be your max mortgage payment. And if you had very little debt, you'd be fine. So that's how you do manual underwrite. So the other 2 are, let's say you have overtime that you just started getting the last 12 months. And the rule for overtime is you have to have 2 years average of it. So if we don't have a 2-year average of it, but you got 1 year of getting it, and let's say it's $10,000 a year for the last 12 months, that's a compensating factor, because you have additional income we're not using. So that would be considered a compensating factor to an underwriter. So that would be a 3rd compensating factor. Then the 4th one is called residual income. Residual income is too hard for me to explain it here. You can Google residual income calculator. I'll simplify it the best I can. It's your mortgage payment, all your debts, child care if you have children, like babysitting money, which you put in your tax returns, and a percentage of, they use a 0.15 factor times your square footage to come up with what your electric bills would be. Let's just say it's $300 a month, and then they take out the income taxes that you pay, and whatever you have left is considered residual income. If a single person, it's roughly about $500 you have to have or more. If you're a family of 4, it's about $1,000. There's a chart for that. So you have to pass that residual income test, and sometimes that's the only thing I can do for the one compensating factor. That sometimes is my only savior. So if you pass the residual income test, that's the 4th of the 4 compensating factors you need for a manual underwrite. And these compensating factors, they're hard to get sometimes. It's hard to get 2 of them usually, but just give us a call. We'll help you out with that. If it's long-term planning, we'll show you how to save some money. That 3 month reserves is probably the easiest one to get to by saving. So please like this video below, and if you have any questions, leave it below and we'll get back to you. Thank you.